$1 billion in a funding round led by SoftBank. This in a bid to accelerate the development and launch in production model vehicles of its embodied AI technology that can learn from and adapt to human behavior.
Well, those were the headlines we've been tracking for you this evening. Venture debt firm Stride Ventures has announced the closure of its India Fund 3 at $165 million, achieved within a year of the first close in 2023. Now, this third fund has a diverse mix of investors that includes insurance companies, family offices, corporate treasuries, and high net worth individuals. To take us through the plans with Fund 3, joining me now is Apurva Sharma, the managing partner at Stride Ventures. Also joining us is Romita Mazumdar, founder and CEO of D2C skincare brand Foxtale, one of Stride's investee companies from Fund 3. And also with me, Arundhati. Apurva and Romita, welcome to Startup Street. Let me start with you, Apurva. Fund 3's portfolio showcases companies like Foxtale, Bluestone, Move, NatHabit and Agrostar, basically representing the fund's focus on consumer brands, financial services and clean tech sectors. So tell us, what has been the ticket size and how many companies would you be investing in from Fund 3?
First of all, thank you so much for having us on CNBC. Very happy to be on this platform. The idea is to invest in about 50 to 60 companies across the length and breadth of the startup ecosystem. In terms of sector focus for us, consumer has been a primary sector for us, and around 40% of our earlier two funds has also been consumer. So it'll still remain one of our priority sectors. I'd say consumer, financial services, and clean tech, which encompasses whether it's companies in the solar space or EV space, etc. So these three sectors will be priority to us, and about 55 to 60 companies that we intend to invest over the course of next 1 year out of Fund 3.
All right. Hi, Arundhati here. So before we go to Romita, Apurva, why don't you tell us what excited you about Foxtale and what is the impact you hope it makes in the market?
Sure. So I think, when we came into Foxtale, the revenue was, I'd say, 1/4 of what it is currently. And I'd let Romita speak about the numbers. But in the last 1 year, the company has grown 4x in terms of monthly revenue run rate. And what really excited us when we were evaluating Foxtale was her obsession towards differentiated high efficacy products, because it can be a cluttered market. But I think her laser sharp focus on high efficacy products and high repeat rate, which she says is her only, go-to metric, was what excited us towards Foxtale. And that eventually results in, lower customer acquisition cost, higher repeat rates, higher customer lifetime value, better return on ad spend, all of it, which is really differentiated if you compare it to other companies in the same space.
Okay, so speaking of differentiation, and Romita, coming back to you, there is a lot of competition in the D2C skincare market. If you could tell us, how does Foxtale differentiate itself? Also, if you could elaborate on your offerings.
Thanks for having me here, to you guys as well as Stride team. Glad to be a part of their journey here. So for us, we are solving for the Indian skincare market, right? We have to understand why Indian consumer today is ready to pay more than 200 rupees and ready to migrate and pay a little premium to that. From a differentiation perspective, what she really wants is a product that works for her. So what we've really differentiated on is efficacious products. Having said that, I always say India is a 2-minute noodle market. You cannot wait for 4-5 weeks to give a result. So the second thing we solved for when it came to efficacy was instant efficacy. There's always a part which is delayed gratification in our products. But when you're using a product, it should have those qualities that can become a habit formation product for you. So we've really been able to, with a very consolidated set of products, consolidated set of SKUs, be able to solve specific problems that are very specific to the Indian skincare market, whether it's photo damage, whether it's free radical movement on your skin, whether it's dullness, dehydration, tanning, etc., and do it in a very, very short period of time in terms of efficacy. For example, our vitamin C serum gets activated with an instant use, right? So it reduces acne scars within 3 days of use. It reduces it by almost 30%. So that's really the differentiation that we have. That's what has helped us scale so far. We basically, if you could look at it, we have 18 SKUs, like, you talked about it, and we started with, when Stride came in, we were probably 2 crores a month. Today, we are roughly a 250 crore run rate company. So we've grown from a 20 crore, 25 crore run rate company to a 250 crore run rate company in a period of 18 months.
Right.
And that scale up has just happened because of great products that lead to high retention and high LTV for each SKU.
Absolutely. So you outlined to us how you're staying ahead of competition in a very crowded market. But you've also said that you're creating innovative, safe products using technology that also caters to the changing environmental and lifestyle needs of women, right? So how environmentally friendly are your products?
See, we try to be very mindful of being environmental friendly from our R&D stage to the stage that we are able to solve for the consumer. So every product that you see is EU compliant, but we are also extremely environmental compliant when it comes to disposal of any wastage that happens at the factory level, at the R&D level. We also only use plastics that are biodegradable. So these are not really fully plastics. We use APVs and certain plastic materials that can be that are 100% biodegradable, because of which we also take a gross margin hit, given the packaging cost is a little more expensive. Today, one big problem we are trying to solve for that once I deliver it to you, do you need to order another set of packaging? Can we use sustainability there with you resending us the packaging? But of course, the logistics and infrastructure in India is something that's still evolving, and I think it will enable D2C brands like us to get there. But that's primarily where we are with our sustainability. The other part of environmental damage is also what happens to your skin, right? And the easiest way to understand it is that pollution causes free radical movement on your skin, which causes dullness and aging. And each of our products, no matter what you're buying it for, whether you're buying it for acne or brightening or dehydration, we solve for that photo damage and free radical movement of the product through antioxidants in all our products. And that's the reason we have delayed gratification, what we call as a efficacy. So there are both environmental sides. There is one which is more on the how we make the products and how sustainable we make the product, and one is how we make your skin more sustainable and more healthy for environmental damage that happens in the day-to-day environment.
All right. Speaking of being environment friendly, and Apurva, let me come back to you. Stride Ventures recently announced a $120 million investment in climate conscious startups, also claiming it is one of the largest climate conscious dispersals within 2 years by an India venture fund. So talk to us about the impact you've created so far.
Sure. So I think, we are very, very focused on how much investment can we make in the climate tech space. And this encompasses solar companies and also EV companies across the value chain, whether it's OEM, ride-hailing operators, charger manufacturers, battery swapping guys, recycling. So I think we have made investments in each vertical across the value chain of EV. And I think that's our contribution towards making sure that the EV adoption is better in the country. And, given the sector is extremely CapEx intensive, you need alternative sources of finance and not just equity. And that's our little contribution there. We've thought that we'll end up investing about anywhere between $500 million to $1 billion in the next 5 years. And we are just charting out our trajectory in order to support with that kind of quantum.
All right. And, Apurva, let's also talk about returns then. Stride Ventures has returned its Fund 1 in its entirety. So talk to us about the kind of returns you've seen.
Sure. So Fund 1, we have returned the entire capital, and we have achieved a net XIRR to investors of about 18%, which is one of the best in the industry when you compare this asset class. And we returned it right in time without any extension, which has definitely demonstrates our credibility. And we have seen a lot of repeat investors from 1 in our Fund 3.
All right. Speaking of numbers and speaking of returns, Romita, coming back to you, Foxtale has about 18 SKUs in the skincare portfolio, like you mentioned, and it also aims to achieve an ARR of over 450 crore rupees by the end of this year. What makes you bullish? Where do you see the next leg of growth coming from?
See, we are a digital-heavy company. 90 to 95% of our revenue is fully digital between website and marketplaces. We are also website-heavy. We are probably the only BPC brand with 50% of our revenue coming from website. We continue to grow digitally 20% month on month. That is one of the levers that will, and one of the growth trajectories that will continue for us over the next 2-3 years. So penetration into the current channels, which includes channels like Nykaa, Amazon, and of course our own website. From a tech perspective, we are transitioning to make our website even more personalized as we grow, to enable better user experiences when you are coming, but also better retargeting to solve for ROAS optimization on the marketing end, to bolster the P&L that we already are quite. Our website is profitable, but we have to increase the margins that we are operating with. So there is penetration in the existing channels. We are also launching body care. So where you see us being around 18 SKUs in skincare, body care as a TAM is a smaller TAM, but it will be a strong addition and a AOV builder for the current users who are coming into our website. So there will be a basket size increase that continues to be a lever that we are still just very, we've just scratched the surface on. Along with the number of users, there will be an AOV increase. So it's primarily all our levers are digital. We are very, it's not just bullish. I know we'll do 450 crores in the coming years, in the coming fiscal year, and hopefully be able to talk about it in a year's time with you guys, with it being a reality rather than a projection. Yeah.
Right. But Apurva, if I could bring you back into the conversation now, as a sector agnostic firm, you support over 140 startups across diverse industries through your 3 funds. So what is the biggest trend you see in terms of funding for high growth startups in 30 seconds, if you can?
So, I think the funding environment has definitely improved over the last 6 months. We still see that the valuation multiples haven't gone back to where it was in 2021. So I think that has been more a strategic fundamental shift rather than just an investor sentiment change. Valuation multiples are sobered, but good companies are raising capital. The diligence is longer, the ticket sizes are smaller. In terms of sector coverage, we see early consumer, Series A, Series B consumer companies are attracting capital. And in terms of growth stage, I see financial services being a very hot sector in that sense. People finding a lot more comfort in backing financial services companies. So consumer and financial services, consumer early, financial services growth to mid. And EV, of course, has been prominent in the last couple of years.
All right, Apurva, we've completely run out of time, but many thanks for joining us today. Wish you the very best with your Fund 3. And of course, Romita, many thanks for joining us today on Startup Street. Keep growing and keep glowing. Thank you so much.
Thank you. Thank you so much. Thank you so much for having us.
And moving on, retail tech startup Daalchini Technologies, through its smart vending machines, is offering 24/7 convenience to customers. The firm extended its reach to over 200 brands, and since its inception, the company has grown about 22% to 24% on a quarterly basis. Now, Daalchini Tech, which provides instant meals through IoT-enabled physical vending machines, has a presence across 100 sites, which include startups, co-working spaces, MNCs, hospitals, and much more. We put the company's co-founder and CEO on the hot seat to find out more about their growth plans, and also with me, Shruti. Thank you so much for joining us on the show, Prerna. You're a retail tech startup. You provide instant meals via IoT-enabled physical vending machines. So what's on offer? What kind of food can one get through your vending machines? And more importantly, how do you keep it fresh?
So we actually provide a 6 meals a day combination, from vada pav in the morning to maybe a quick meal of rajma chawal through the vending machine, or for your quick snack break with a energy bar. Everything can be actually found on our vending machine. That's the beauty of our vending machine. And then these vending machines today are present from Kutch to Shillong to Kashipur to Kochi. Across about 60 plus cities we are now present. And we are now present in about 25% of India's top listed companies today. So that is how we are serving the consumers today in corporate offices, factories, hospitals, colleges, all across.
All right. Thank you for taking us through your model. This is Shruti quickly stepping in. You do compete with the likes of Vendyman, Gobbly and NutriTap. While you have the first mover advantage, Prerna, in this space, where do you see your next leg of growth coming from? What's in the pipeline for Daalchini? How do you really, step up the game when competition really comes in?
Yeah, so today we are India's leading company with 2,000 plus vending machines present across the country. When you say that how are we seeing the next set of growth, so we are actually seeing a good growth in tier 2, tier 3 cities, hospitals and colleges and factories of tier 2 cities. So we have especially in the last 2 quarters, we have seen growth in cities like Jharsuguda, Kutch, Sambalpur, Tikri, Renupur, Renusagar. So cities where you would find a lot of worker population, industrial growth happening there. A lot of MSMEs present in those cities, right? That is where we are seeing the good growth happening now.
Right, so you're seeing a lot of growth in tier 2 cities. And like you said, you have over 2,100 vending machines with a presence across 7 cities, obviously a growing presence right now in tier 2 cities. So what's the kind of reach you have, and how do you price these products? How affordable are they? Give us a sense of your presence via your clients, and how many active users are you currently seeing?
So we're doing about 1.5 million transactions on a monthly basis. We have about 5 lakh plus monthly active users who are transacting on these vending machines, which is one of the highest per user transaction on any e-commerce platform if you see today in the country, right? Any food tech platform or e-commerce platform would not see that kind of a per month transaction from a user that we are seeing from our vending machines. Primarily from the perspective, we are the one who's most convenience for the consumer. We are the nearest to the consumer when consumer really thinks of buying anything. We are the one who's available instantly for the consumer. So that is what has helped us so far in getting that kind of a reach to and getting that kind of a space in the consumer's mind today.
All right, Prerna, let's talk numbers now. You hope to achieve 100 crore rupees in ARR and become PAT positive. What are you currently clocking, and how soon will you reach these targets?
So in fact, I would say last 3 years, we have been doubling our numbers consistently. We have grown about 250% in the last 1 year in terms of vending machines also, and in terms of our transactions also, our users also, all three perspective. And that is what we see that we'll continue to do. So from a 5 crore number to 12 crore number to 44 crores number, and now 100 crore numbers. So it doesn't seem very bullish, but we have been consistently doing double. So we should be doing double this year as well.
All right, so expecting to do well in this year as well, but you hope to install over 10,000 vending machines across India's top 100 cities. So by when will we see you able to achieve this milestone? Can you elaborate on your expansion plans? Which are the new cities you're looking at?
So we are already present in about 63 cities as we speak, and the idea for the current year is to go deep into these cities. We are already present in some of the top MSMEs in those cities, but there are a lot of colleges, hospitals, metro stations that are coming up, where we are deploying now into tier 2, tier 3 cities. So that is where we see most growth happening. However, on your question that how do we see that the number of 10,000 we reach? So today also, if you look at the metro cities, constitutes about 70% of our vending machines. But tier 2 is where we are seeing most amount of growth. And that is why we see that in 18 months time period, we should be able to reach the target number that we have kept for ourselves.
Speaking of growth and speaking of revenue targets that you just shared with us, if you could take us through the revenue model, how are you making money?
So there are typically 3 sources of revenue. One is that whatever food items that are getting sold through the vending machine, 50-60% of the revenue is coming from that only. Then there is about 20% of our revenue which comes from the advertisements also. 100% of our vending machines are actually cashless in nature and come with an Android touchscreen. So which gives a place for a lot of D2C brand on to advertise about their product and also tell the consumer about their story. So that is where we get about 20-25% of our revenue. And rest 25% comes from our subscription product, where corporates take these subscription for their employees for providing these 24/7 vending machines across their workplaces.
Right. And, up till date, you've raised a little over $6 million in funding. Will you be raising any more funds soon? What's the plan on the fundraising front?
So last quarter was our first PAT positive quarter. So that is what, so as an organization, while we have become a bit positive, we should not be raising a lot of funding. But yes, the kind of growth plans that we have, so we may need to raise fund maybe in the 3rd quarter of this year.
All right, Prerna, one final question before I let you go. What would you say is your tech edge? Like we discussed, how you differentiate from competition, but how are you using technology to really step up?
So I would say that we are a technology-first company, hence we can enable anything, anytime, anywhere through our retail technology. So that is what our USP is. Whether you want a beauty or personal care brand to be selling their products through our vending machines, or a dental care product brand selling their OTT products from the vending machine, or maybe a book publication wants to sell books, we can actually enable anything from our devices. That's our core USP.
All right, Prerna, thank you so much for joining us on Startup Street today. We wish you all the best on this journey going forward.
Thank you so much for having us here.
On that note, it is time for us to head into a short break. But coming up next, attention viewers, are you also fed up with poor traffic management that causes delays in your schedule? Well, Hyderabad-based startup Pushpak AI aims to revolutionize traffic woes through AI. We get you a special report on the other side. Stay tuned.
Welcome back to Startup Street. If you are thinking of jumping a traffic junction, think twice. Artificial intelligence will capture your violation and track you down for a challan. But who is enabling the police? Well, it's a Hyderabad-based and T-Hub incubated startup called Pushpak AI, which is not only helping the police, it has another technology that will help you stay less irritated on the Indian roads. And what's that? My colleague Akhil Vishwanath tells you in this report. Take a look.
Long, endless queues of cars and vehicles that stretch for miles, slow traffic that moves at a snail's pace, and traffic lights that never turn green. All of us are familiar with this scenario on Indian roads, and it can be frustrating. So, can something be done about it? Well, there is a solution, and it is currently deployed at multiple locations in Delhi NCR. The solution has come from a Hyderabad-based startup which has married artificial intelligence with CCTV cameras, radars, and existing monitors to change traffic lights based on real-time density. But as much relief as it may bring, be careful and don't jump signals, because traffic police is not only using the technology to decongest our roads, but it is also nabbing rule breakers with the help of Pushpak AI.
We have deployed solution all across Delhi where we are checking if there is a violation, for example, red line violation, stop line violation, or overspeeding violation. So that we are detecting, and then we are giving the analytics back to the traffic department for basically challan raising and all.
At first glance, smart traffic lights at every corner seems like a simple solution. But setting up specialized cameras at each junction with all the back-end infrastructure for adaptive presence is quite expensive. That's the challenge Pushpak AI is solving. The startup claims the Delhi Traffic Police could deploy its AI solution in just a week's time, reducing camera setup costs by 60% and slashing infrastructure spend by another 70%.
The main USP that we are providing is we run on edge devices. So this is a device, this is the box on which our AI model runs. So one of these device can accumulate more than 4 cameras, and 4 different use cases will run on this device. So this comes at a fraction of cost, and the deployment is very easy. It will not be required to put on big servers.
Following the successful deployment with the Delhi Traffic Police, the startup has quickly taken its AI-led traffic management solution to 12 to 15 cities in India. It has over 800 operational cameras which send back more than 1 lakh alerts and 6 lakh plus annotations every single day. The startup, in fact, has gone global.
We have deployed for Delhi Traffic Police, Himachal Pradesh, J&K, Gujarat, Bhubaneswar, and many other cities in India. Across the world also we are deployed for Singapore, Indonesia, and different other countries as well.
Talking about going global, Pushpak AI is now targeting the Middle East market, especially Dubai, which is known for its shopping malls, for the startup's second key AI-led video analytics solution, which is crowd monitoring.
If I have a store in a mall, I am checking how many people came, which product did they see, which aisle they went, or how to increase the people flow in the mall itself. So that is the second solution that we have. The third solution that is into safety, security, compliance monitoring. So for different companies we have implemented, we are checking their compliance percentage across their manufacturing floors. Basically how many people are complying to their KPIs. If they are not complying, we are giving them either an alert on a Hooter system, or basically on their phones, emails, WhatsApp, or many integrations are possible there.
The startup, which has collaborations and partnerships with the likes of Nvidia, Microsoft, and AWS, has taken its computer vision AI solution beyond video analytics to now include automated document processing for insurance companies and NBFCs and e-commerce workflow automation, which enables a new product addition in just 27 seconds.
What happens is if I have a store on Instagram, I have hundreds of products that I want to scale it to Amazon, Myntra, Meesho, or any other platform. When I go and upload there, they have a very huge Excel that I need to fill. But it takes me 20 minutes to just fill one product. What happens is if they give the hundreds of images to us, we classify, we extract everything from those images, and at the end they can just click on Myntra, they'll get the Excel from Myntra. So this just takes seconds for them to upload on any other platform.
Founded in 2020, the bootstrap Pushpak AI was incubated at T-Hub, IIIT Hyderabad, and NASSCOM, and is now in the process of raising its first institutional funding as it seeks to scale its offerings globally. The search for funds comes at an opportune time, as deep tech startups secured $500 million in 2023 despite the funding winter, with deep tech dedicated VCs setting up fresh funds, as per a report by NASSCOM and Zinov. The report also found 70% of the startup founders embedding artificial intelligence in their solutions. What could also enable faster lab-to-market journeys for startups like Pushpak AI is the National Deep Tech Policy, which is in the final stages of interministerial consultations. With camera person Gaurav Tyagi, this is Akhil Vishwanath for CNBC-TV18.
And with that, it is a wrap on this edition of Startup Street. From Shruti and me, goodbye and many thanks for watching. More news and updates continue on the other side.